All right. Talking about supply and demand strategy, how I mark out my demand zone and my supply zone. So first of all, I want to find out the trend of the market. If the market is pushing to the upside, breaking structures to the upside, which is showing us that the market is in an uptrend. So hence, market is in an uptrend. What I'm looking out for is demand zones, right? Is demand zone. So there are three basic things I look out for to mark out my demand zone. Number one is imbalance. I look out for imbalance or gap, fair value gap. Then number two is a break of structure, right? Then number three is a strong momentum. These are three things I look out for to mark out a zone, right? So if the market breaks this structure to the upside, once this structure is broken to the upside, definitely there will be a strong momentum. There will be a strong momentum that broke this structure. There will be a strong candle push that will make this structure to be taken out, right? So upon that strong bullish candle that will break this market, we are going to be seeing an imbalance on that candle, right? Then the last candle to form the candle that broke that structure will be my zone, right? The last bearish candle. This is in an uptrend now, in an uptrend scenario. So let me explain very well. This structure has been broken to the upside, right? The last candle that broke this structure, the last candle that caused this break of structure, that will be here, that caused this break of structure, the last bearish candle, whether it's big or small, that will be my zone, and I'll be waiting for price to come back and tap that zone again. Remember, I said I'll be looking out for 1, imbalance, 2, a break of structure, 3, a strong momentum. Then let's go to the chart. Let me show you what I'm trying to say. So for you to get after you have marked out your market structure, right? Look at this market now. Look at this market, right? You can see vividly from here. You can see this was the last. This market now. This is in a downtrend, right? This is in a downtrend. It's just the same thing, uptrend and downtrend, just the opposite. So this is a downtrend. This is the last bullish candle before sellers took over the market, right? So you can see what happened here. You can see a strong push to the downside. So market gave a strong push, leaving an imbalance. You can see this imbalance from here all the way down here. This is an imbalance that will attract price again, right? This imbalance will definitely attract price. And once price comes, is on my zone. This last candle before sellers took over, I will mark it out from the high to the low, and that will be my entry and my stop loss. You understand? So once price comes back to fill this gap, definitely it will tap my supply zone and then start dropping, right? So this is how I mark out. This one now is supply zone. Let's just look for an uptrend market and see for demand zone. All right, you can see here now. Okay, sorry. First of all, I used to look out for my trend to get the market direction. I use 4 hours to get my market direction. Then I use 1 hour to mark out my zones, right? Sometimes I might not be able to see a zone with 1 hour time frame. Then I'll go back to 15 minutes. For instance, let's look at this chart. This GBP USD. You can see that from here I marked out a zone here. You can see that this is a zone. This is a zone, right? You can see an imbalance between this candle. You can see there is a gap. There is a little gap here, right? But this is not clear. You can't be able to see it here. Or then what will you now do? When you go to 15 minutes, that's when you will see it more clearer, right? On 15-minute time frame, now you will see, okay. So on 15 minutes time frame, now you can see the imbalance, right? This is a gap. You will agree with me that this is a gap from here. From this bearish candle wick down to this one, this is a gap, right? Which price should come back to fill, right? Even though price has come all the way up here, but it's still remaining, right? Price is still expected to come back to fill this gap again. So you can see that this sell zone now, if you check on 15 minutes, you see that the last bullish candle here was a very strong one, right? A very strong one. So what will you do? In this scenario, you go back to 5 minutes. Or 5 minutes, sorry. In 5 minutes is where you will now see your main market. You can see on 5 minutes, this is where your supply zone now is. You can see it. This is the last bullish candle that before buyers took over the market, before sellers took over the market, right? So you can see the candle from here all the way here. You mark it out, then still wait for price to come and react on these zones before you can take in the trade, right? I don't know if you understand. So let's look for an uptrend movement. Let's look for an uptrend. All right, in an uptrend, all you are looking for is just supply zone, right? Sorry, demand zone. In an uptrend, you are looking for demand zone. Then in a downtrend, you are looking for supply zones, except you want to counter trade, right? Except you want to counter trade. In a case whereby you want to counter trade ahead, that's when you can say, okay, I want to counter trade. Let me look at for whether let me just look at for any, maybe market is in a downtrend but it's pulling back. Maybe there is a pullback which is buying. You know, say, okay, let's use scalp small, except you want to scalp, right? So in a this is supply market, right? I just explained, right? Then in a downtrend also, we also look out for this. Sorry, in an uptrend, we also look out for the same thing. What you have to take note of is there must be an imbalance. The market must leave an imbalance. 2, there must be a break of structure. Like if the market did not break structure, is not a good one. Yeah, it must break structure. Then 3, it must have a gap. That's what makes it a higher that's what makes it a high probability supply zone. Once it broke structure, have an imbalance or fair value gap, and then a strong momentum, right? Know that price will definitely come back to that zone. It might not come back that day. It might not come back the same day. It may take a few days before it will even come back, but just know that market will definitely come back. Then when market comes in my zone, how do I trade it? Let me now, this is where the main stuff is, because price might be in your zone and price might be in your zone and you still miss trades, right? Yeah, there's every possibility that price will still be in your zone and you still miss trade. So this is my zone. Let's say this is my demand zone now. This is my demand zone. Then price is forming a lower low. Price is forming. Let your situation share the sea. I'm a winner. All of a sudden, now price is in my zone. Once price is in my zone, I wouldn't be in a haste to maybe because price have tapped my zone, I will just jump in. No, I wait for chart pattern. I wait for candlestick reaction to see price action, what price is doing there. If there is weak rejection, is the candle rejecting? Is there a strong momentum? Is the buyers getting stronger or the sellers are still getting more stronger? So what I look out for is I wait for market to come back, break this structure, which is now a change of character. That is, if this zone is 1 hour zone, if it's a 1 hour zone, on 15 minutes, I want to see a change of character. Let market change character, then pull back. Upon this pulling back now, there will be another little demand zone that will be created. But this one now, I normally spot it out on 3 minutes. Yes, after this break of structure, price will come back. There is another demand zone that price will create in 3 minutes time frame. Sometimes it will be on 5 minutes time frame, sometimes in 3 minutes, but most of the time it's on 3 minutes. Price will create another little demand zone. Once price creates that demand zone, price will just come. Once price taps on it, it just goes up like crazily. This is what I normally watch. So once price comes to that my 3 minute zone, that's where I catch my entry. That's where I take in my entry, right? That's where I take in my entry. That's where I will just take my entry from there. Most of the times I used to set I
More
used to, if
music on
I'm with my phone, once
trendybeats.com.
price starts there and rejects once, bam, I'm in the trade, right? So then my stop loss will be up below. My stop loss will be below this last low, and it will make you to risk less. You understand? It will make you to risk less. Once price have tapped in that your depth, and price will start going up, right? Price will just start going drastically to the upside. So this is what I look out for. Once price comes to my zone, I wait to see a change of character to the upside, then they pull back. That pullback must tap a demand zone of 3 minutes or 5 minutes demand zone. From that demand zone, I take in my entry, putting my stop loss to the last swing low, which is this low here. Putting my stop loss below this low, but putting my stop loss below this, so you can see that's where my stop loss is. But I left a little gap, so that in case price want to come and take out liquidity, then it will I'll still be on the safer side, then it will go up. So this is what I normally look out for in my zone. In an uptrend, in a downtrend scenario, still the same thing. I still look out for a change of character, a pullback, go to 3 minutes, mark out 3 minutes demand zone, wait for price to mitigate it. Once price mitigate it, taking your entry and ride it. Just once market gives you this pattern, like once this pattern forms, just ride the trade. Just that sometimes it may not form this pattern, but whenever you see it form, ride the trade, like ride it aggressively. That's the two trade. I traded it yesterday. I got two trades yesterday, and they were all very good, very good, very good. One was news, one was normal trade. Like they were very good, very cool, very like they were very cool. And it was just this pattern. The pattern printed perfectly well for me, and I took the trade. I went aggressively, and I made a good profit. So this is how I mark out my demand zones and my supply zone, and things I look out for after I have marked it out, right? So for this strategy, right, all you need is patience. Patience is the key. Don't try to be faster than your shadow. Just be relaxed. Don't put your mind in it. Just relax very well. Watch out the market. Once market prints out, just set trap for the market. Once market comes your trap, first victim of your trap, you now take advantage of it. So this is it for now. Thank you so much, and God bless.